not a Dave Ramsey fan, but I think if you are a beginner and you're listening to this, start with that Dave Ramsey path. And then as soon as you get things in correction, move forward. All right, welcome back to an Unfollow the Herd podcast, and specifically a solo podcast. Today, I am diving deep on a 10-year plan that can create you financial freedom. Literally, if you can hold your stuff together for a decade and then plan to stack on some assets slowly but surely, I promise you in a decade, your life will be completely different. And I know that's not what everyone wants to hear, because they want to hear how do I get rich quick? How do I do this like this year so I can quit my job? Honestly, that shit doesn't exist. I wouldn't even put that into a factor. I would put things into perspective on 1 to 3 years, 5 to, so on and so forth, kind of building a plan. And I always reverse engineer, right? Like, let's build the outcome you want, and let's reverse engineer on how we get there. So I'm reverse engineering a simple plan for you. This could be simple at the gate. This could even be the more sophisticated investor that, hey, maybe they have 10 properties already and maybe they want to get to 1,000. Guys, same steps that I'm going to explain in this podcast. So what I want to dive into right now, and you're like, Mark, I don't want to hear more shit on how to figure out how to buy real estate and passive income and all this. Just listen to me, hear me out for literally the next 15 minutes. I want to explain to you on what I know about building wealth through real estate, as I'm, now I'm like 7-8 years into this journey. I only do this podcast to explain what's going on in my life right now and how I'm building to get to $1 billion, right? Like, I don't want to just, I'm not here to play small. I'm not here just to play by myself. I'm here to explain to you how I'm doing things right now in literally the mud of things, and giving you the detail on what I'm going through and how I'm solving problems, how I'm, learning from failures that didn't work out, and literally giving you the fastest path, or, and following the herd, so you can literally have the fastest path to passive wealth and build your own legacy. So, all right, let's get into this, because I want to explain on years 1 through 3 and like how important this is. But I did not even do this path, but I want to explain to you what you should be thinking about right now. If you're older, like mid-30s, you probably have kids. You probably have things going on, and you probably have a lifestyle, a bar, right? We've all followed Dave Ramsey's, lowering our bills to live on more of our income to put away more money. That's a very slow way to build wealth. It's a very smart way to start out of the gate, though. His baby steps are great things out of the gate. Emergency funds, getting yourself out of high interest debt, following along the baby steps path. I'm not going to go through it. I'm not a Dave Ramsey fan, but I think if you are a beginner and you're listening to this, start with that Dave Ramsey path. And then as soon as you get things in correction, move forward. But like, one of your biggest things is going to be growing your W-2 income. I know your bills can only go to 0, but I know your income can go infinitely larger. So I want you to figure out how to make more at your W-2 job. You got to figure out how to make your company more money. You need to figure out how to solve more of your boss's problems. You need to figure out how you can take on more responsibilities at your level without drastic change, but just making more per hour, so you can then put away more money. Because when we're a little bit older, say you're in your mid-30s, I have 3 kids. I have a standard, I have a house. And that's going to happen in most millennials like myself. All are going to have more things. We're a little bit older, right? We're a little further through life. So we can't let's, kick the kid out of hockey, or don't let the kid do sports because we want to cut all these bills. You don't want to think about it like that, because your chance of lowering your bills drastically. Now, you can cut some subscriptions. You can cut some things that are not needed, maybe that you have it on the credit card, or reoccurring payments. You can cut down what you drive. You definitely do not need to drive the nicest of the nice or brand new leased cars. Really, that thing just gets you to work and back. So if you can cut some of that stuff out right away, hey, great. But I'm telling you not to focus fully on this. Figure out how to increase your income and by asking good questions to your boss and solving those problems. That's going to make you a better employee. It's going to make you keep your job in a recession or wherever the hell we're in right now. And it's going to drastically change your income levels or the amount of money that you have discretionary. So you want to grow your discretionary income, but then you want to take that discretionary income. That's like step one. Like you have to get there. If you don't know what your bills are and how much you're making, like don't even follow on to like step 2 of this process. Remember, this is years 1 through 3. It could take you a year to get your credit card bills paid for, get your discretionary income level right, get your income level up. Very boring things. But figure out how to give your active income or a W-2. Maybe it's a side hustle that you're going to do, whatever. Figure out how to do that income. Then what you're going to want to do is spend some of that money. You don't want to save all the way up for 20% down payment in some real estate project. It's going to take you years to do that, especially if you're making 50 and your bills are 40. You got 10 grand a year. Okay, I want to buy apartment complex. Okay, great. That's $1 million. Whatever, a 12 unit. And you're like, oh, well, it's going to take me, 8 years to freaking probably save up enough money to even get close to buying this thing. Really, it's more like 20 years, right? Like, obviously your income will go up over time, but it's going to take too long. We will need to get you in real estate right now. And that's what I want to go through in this podcast. But you have to educate yourself. Don't over-educate yourself, right? And like, you can buy books very cheap, right? Like, let's not talk about even educating yourself is expensive. Literally, you got YouTube, books, podcasts, all these different things to listen to, but you hear all these different metrics, the 1% rule, the 2% rule, the cash flow, DSCR, and all these different terms. Well, if you want to go, like you are a quick mover and you're like, hey, I want to move fast. I don't want to wait 3 years to buy my first property. Hey, then keep listening to this podcast because you're probably going to need some kind of coaching, or you're going to want to aim like, hey, maybe in the next 6 months, I'm going to buy my first rental. I know anyone on here listening to this can do that, right? Like I know for a fact we will find a deal that we can underwrite that we could buy. And maybe you don't know how to do that yet, but I know with some coaching, specific coaching, maybe it's one-on-one coaching. I've had one-on-one coaching clients that are buying businesses and doing all these other things. They're buying properties in other states that they don't even live in, and we're doing that together, right? Like, it's not that that's my expertise, but I'm mentoring them through what to look for, how to find a good deal, how to finance the deal, how to ask for seller financing, how to creatively get the financing done. You need to understand all these things, and without educating yourself out of the beginning, you're not going to be able to know what you're doing. And sometimes, like when I first started out, I just like, here's where most people go. Like people that are renting and spending $2,000 a month on an apartment. They're like, shit, I want to stop throwing away money. Okay. Well then, let's look at a entry-level home at $400,000. The mortgage is $3,500 plus we got to pay taxes and insurance. Maybe that's in the escrow in the payment. But then let's think about, now we have to fix the thing, heat the thing. All the bills are drastically more on a house. And so you're spending well over $4,000 on this place to live when in reality, homes they're going to appreciate very slowly, right? Like it's going to take forever to get super wealthy and pay off. Like what is your goal? Like our parents' goals were to get a 30-year fixed loan, pay off the house as fast as possible. And then like that was where all their worth was. Well, when you actually look at the way the rules are written, when they say, what's your net worth, you have to exclude your primary residence. So does it actually make a lot of sense to have all your money tied up in a freaking house? Not really. Not in any circumstance, unless it's less than the rental amount or very close to it, right? Because I get you're paying down the principal, but does that thing have any chance to produce revenue? And it usually doesn't. Unfortunately, it's just a taller hill to climb every time. These mortgages have to get paid. And if you don't pay it, guess what? You lose all your equity in the deal. And, you got to sell it for under market in a time like this, right? So think about it. Be smart. Like, hey, renting's not that bad. It takes less time to do as far as like maintenance and everything else. Everything else is taken care of. You literally just live there. You have the amenities. And guess what? The spread between affordable housing and rental is literally at an all-time The gap is as large as it's ever been. So, just think about that. And as you go now to think about, okay, I'm going to educate myself on this. And if you're listening to this, go on my Instagram, DM me the word coach, because we have a webinar that'll be coming up next Tuesday. And if you want to get on there, DM me the word coach. I'm going to literally go through all the real estate, how to get a deal done, right? Like give you the cheat code. And then I literally will have a mentorship offer. I also have some coaching offers. So you can do your own deals without me, but maybe you like what I'm saying. And you want to get your own deals done as quickly as possible, then guess what? You need a coach. We can all Google a fitness plan and write it down, right? Like, and follow it at the gym. But I tell you, like, since I've been doing CrossFit, having a coach in your face telling you to do this stuff and that like you have no chance to stop, you can't slough off, you can't be watching Netflix on your phone while working out, like you can't be doing these things. It's much different. I'm telling you. It's very different when you hire a coach in something, and that's when you want results. When you're willing to invest in yourself, which is always your highest ROI, and like getting results done. Instead of following some YouTube script and trying to go search deals yourself, you're just blankly like searching out in the middle of nowhere. Just don't fucking do it. It's a waste of time if you want to get shit done. You can go read every book you want, but I promise you, that probably still isn't going to get you anywhere because you're procrastinating on the long-term vision that you do not even need to educate yourself for 3 years to get this done. But I know that for a fact in 6 months, you guys can get a deal done. And make sure you're on that webinar. Just DM me the word coach or to this podcast, and we'll figure out how to get you the link so you can sign up for that. But another thing, aiming at your first rental within the 1 3-year period has to be mandatory. And I think, not everyone thinks they're in a financial position to take on property or real estate. Yeah, there's risk. There's risk in any investing, but it's honestly the lowest risk for the highest opportunity. It's not a get rich quick, right? Like we're not getting rich fast on $2,000 worth of passive income every year. No, we're not. But we're going to get really wealthy after 10 years, and that house has been paid down. You're paying down on an appreciating asset. So anytime you got that happening, you're paying down the principal, and the thing's still going up in the value every year. And we're not looking at the short term. We're not trying to get rich in 3 years, right? Like most people with that plan, in 2 or 3 years, and like, I'm going to get super rich in real estate. I've heard some weird stories. I've never seen that happen other than 21 and 22, where people were overcharging fees and doing weird flipping homes that were having a lot of upside. But I always hear about the good stories, and then they always tell me, well, yeah, and then I'm still sitting on like 5 flips that I'm probably going to lose 150 grand each one. Why? Well, because the market flipped, right? Like now home values were stable instead of climbing as fast as they were. So anyway, that's the short term. Literally educate yourself and try to focus on getting a deal. If you want to get a deal done in 6 months, find yourself a coach. Like you said, if you want to learn more about that, DM me the word coach, and I'll get you on a webinar next Tuesday with us. And okay, years 3 through 5. So now that you're in the flow, now that you got a deal done, right? Like if you got a deal done, maybe you hired a coach, you got one done in 6 months. Maybe you just did one in 3 years. You're like, I've educated myself. I understand what all the terms mean. I understand what the hell I'm talking about. And now you need to focus on doing one deal per year. And you're like, I don't have that much discretionary income. I can't do that. You need to focus on a creative finance method. There are so many methods where you need $0 in your checking account to take on a real estate property. Figure out how to be the best property manager, so you can run the thing efficiently. You're going to have to do this. Like people think like you go buy real estate, I go hire the property manager, and they send me checks. Like, what are you talking about? They're like, no, I'm buying back my time. I invest in real estate. No, you're lucky if you grind and ride that property manager's ass to make $2,000 from this small property you bought. Maybe it's 12 units or less. Maybe it's a single family. I'm telling you, you need to learn the property management game right out of the gate. Like, figure out how to run a property efficiently. And then when you get enough units where you're like, wow, I can't do 100 units in-house, I can't control 15 VRBOs. Yeah, then look for a property manager. But at that point, you should be making so much money from these things that you're like, yeah, I know how to run them. I know that I'm good at getting deals done now. Now I just need to freaking figure it out. Don't think like I'm going to go buy real estate, hire the property. Like it just doesn't happen like that. I'm telling you right now, of all times, operations as hard as it gets. It's harder to get leases. It's harder to get rental increases. Expenses are going up faster than rent increases. There's a number of things happening where it's very difficult. And so the only thing closest to that where I think like some people don't like doing multifamily. Some people don't like doing short-term rental. It's very involved. But I told them, you have to manage it yourself. Don't even think about property management. Like, well, I have this full-time job. Great. Everyone else has a side hustle. This is your side hustle now. This is your investment. This is your legacy. This is what hopefully in 10 years, in a decade, this is when everything will pay off. And I promise you it will. It's not a get rich quick. It's a get rich for sure thing. And so just try to do one deal per year, at least a deal. Like if it's single family homes, you should be getting one a year. Like if I was doing a 10-year plan, I'd be like, I'm taking down one property every year. And I should have 10 properties at the end of 10 years. I should be rolling cash flow. My assets will be buying more assets. I guarantee by the time you get there, your first and second house will be buying your 11th house. Your third and fourth house will be buying, you know what I mean? It'll just keep rolling. And you're going to build up a very big legacy. You're going to be part of the 1%. And this is a very simple plan that I know anyone listening to this can do. You just need to learn the hardest time is right out of the gate, because you're going to be reading all these books and these metrics aren't going to hit perfectly. You're not going to find like the perfect deal. You're going to be like, you're going to talk to yourself out of every single deal. I know I've worked with people. All they do is come back with like, oh, well, it's not hitting the 1% rule. It's like, what book? I'm sorry, but that time was then. This is now. We're not in the bull run of from 2008 to 2021, and then all of a sudden the craziness of 21. A lot of that has ended. Do I think housing is going to go down or crash? No, I think it's going to continue to go up. Just like the stock market, the last 2,000 years, real estate has gone up. It's just, it takes time for it to go up, right? Is it going to be good now, next year, or the year after? I don't know. It might do okay. It might be stable. It might not provide any cash flow. You might have to pay into the property to keep it. Plan for that. Underwrite it correctly by hiring a coach or hiring someone that knows what they're doing. And I guarantee in years 3 and 4 and 5, things will get much easier. The first couple of years, it's always tough, especially if you're using creative financing with zero money. If you're using zero money for a deal, you should have a capital reserve account for that, because, hey, you probably underwrote it pretty thinly, meaning you don't have a lot of equity into it, if any, and you want to keep the asset because equity is everything as you're building wealth. And if you can do that, then guess what? You will graduate and you will keep the property and you get that old seller out of the deal through creative finance, and you'll own all the equity and you'll start building your own legacy. But you need to look, like, people realize, like, I found one good deal in Houston. I found one good deal in Vegas. I found one good deal in South Dakota. It's like, hey, great. Is that all you've underwrote? Like, literally understand that it literally will take 100 deals to find one. Like, if you're not into working, then you probably aren't cut out for real estate, unfortunately, because it's a grind to search up deals and to get them to underwrite and to get things even to the closing table. There's due diligence timelines and things where you can really deep search the property. Now, I do a little bit different thing when I'm not dealing with properties. I'm searching development deals. And so when you're talking in the form of development, taking bare land and building multifamily on it, it's much cleaner in the end, right? Like, because it's a new product. Of course, it fills fast because people want to live in new. And it's just a easier experience. But now you do have to stabilize. It is a new product. It is obviously costs the most money to own something like that. So development deals exist. Most people always talk in the form of value add, but there's so many investors after the value add, and the cap rates have not risen, where now our build cost, we're coming in at a 7.5 yield. And I know if you're beginning, you don't know what any of that means. But when you can literally build something for, let's say, 12 million and it's worth 20 after it's stabilized, meaning there's full of tenants, why would that not be a good 3-year deal? And you just exit. Why don't we just sell it? Because larger institutions, we'll call it, are holding properties. They don't need as much yield on their cash. I know that you can earn cash at 5% at your bank account, and that's a good return. But you need to prove to an investor that, hey, I can provide higher than that cash return, because otherwise it seems risky to them. Why would they go into your 4% cash on cash deal if they could earn 5% risk free at the bank? They're not going to do it, right? So you have to understand that in the form of development, it's not even like, even guys like me, I love to buy and never sell anything. Like, that's what I love doing. But if you don't have the capital to do so, or you don't accept them low of yields, sell it to a big REIT, or sell it to, think about your exit strategy. That's what we do in the development game. It's a very different game. And I'm going to explain that a little bit on our webinar into the real estate, because I think everyone's chasing deals and there's so much deal flow that I want to also explain the experience of developing something. Can you produce cash doing that? And so make sure you're at the webinar. Again, you can just DM us the word coach, and we'll explain all that next Tuesday. So now that you're in years 3 through 5, remember, like, you're doing one deal per year. Like, that may seem like crazy to you, but it's not all that crazy when you're focused on it. You might get bored with that number. You might start doing two deals a year. You might say, I want 1,000 units in 5 years. I tell you, that's probably not possible unless you're willing to take on a whole lot of risk, and you could get financing for that. Otherwise, you have no chance. But you need a mentor at that stage. Like, years 3 through 5, like, I have one-on-one mentors. It's like, you need to be experienced people learning how to search better deals. Like, instead of just finding a bunch of good deals, how do we find a bunch of great deals? How about, instead of hanging out with, listening to our parents and that we're taking on too much risk and that we're going to go to zero, let's start hanging out with people that say, hey, this is a good deal. It's in the perfect location. It's going to provide the best cash return. Mentors, I'm talking about people that are in the game. Maybe they're 1 to 2 years ahead of you. Mentors have proved me and paid me. I mean, they haven't paid me, but it's paid back so much that's why I pay 6 figures. Usually, I've paid well over 6 figures for freaking coaching. And it's just because you need to know, you need to be around those types of people. You need to get to think like they think. You need to see deals like they see deals. You need to know where they're finding deals. So I'm going to talk a lot about mentorship and the coaching next Tuesday. Let's talk about years 5 through 7, because I think now we're getting towards, like, okay, things should be starting to get a lot greener. You've literally learned how to provide sweat equity. Maybe you improved the house, you redid the kitchen, redid the bathrooms, increased the rents. Hey, that's great. You didn't charge out a bunch of labor. You bought all the materials, the cheapest at Home Depot or whatever you did, right? Like, you increased the value of something, whatever rental you had. You've learned how to really increase cash flow. So, was the $5,000 that we put into that rental worth the $250 rental increase? You start learning the math of things, and you're like, wow, I'm going to return in a year, and that kitchen will be there for 20 years. So you start really understanding how to provide better cash flow. And you also learn now that, like, hey, I can close deals. Like, this is possible, and I don't have to have $50,000 in my bank account to close one deal. You want to understand that, and by years 5 through 7, you're going to be like, wow, I'm in the groove. Even if you're doing one deal a year, even if you did one deal in 1 to 5 years, like, you will have a better understanding of this. So, instead of, like, at that point, 5 through 7, you're going to be like, gosh, instead of single family homes or duplexes, fourplexes, maybe you want to go with a bigger deal, because you're like, gosh, they're really hard to manage. And, I'd like to have something with, like, scalability so that I could host maybe 100+ units. So, hey, I can have an on-site manager. That would just make things much easier. They would know the property. They know how to fill it. They would know how to turn units correctly. Um, and I'm saying a lot of lingo just because I want to help educate. You should be curious by what I'm trying to say, and be curious what I'm saying. But you want to find what you're good at, though. Whether it's fixing and flipping, buying a duplex, doing short-term rentals. Those can be fun. Not necessarily make the most cash, but they can be fun. And then I love developing. So let's talk about storage. Maybe you don't love the property management side, but you love owning boring investments. We should talk a lot about storage. Storage was one thing that I turned to fully. I thought it was multifamily townhomes only. Now I've converted to this storage model of buy and hold, build and sell, anything to mitigate risk. And storage is very easy to manage, which is the bread and butter, and specifically luxury storage. I know most of you guys know me for, but this is years 5 through 7. This is where I discovered that, right? I'm discovering that right now. This is the phase I'm at. I've hired mentors, I've hired coaches, I've hired the best of the best. I've learned from them. I've done property management for a year and a half. I got to a scale where I realized I'm spending too much time on property management and I need to spend more time in development. So guess what? I got rid of the property management company. I outsourced it. And I'm learning all this stuff. I've done some fix and flips. I've done, I've bought duplexes. I've bought townhomes. I've done a short-term rental. I bought one in Scottsdale. That was just recent, within a few months. I've been developing storage, and that was out of accident. I just kind of like the concept. And so I didn't overstudy it. I took a risk. I was just no, I'm going to get into it. Because if I was willing to get into it, then I'm going to pay attention to what I'm doing. And then, so, now I'm at the point where it's now I need to raise money to get more projects done. I have the verticals with construction. I have the verticals of the development company. I have verticals. I have a small property management company for the storage, of all these little different verticals of how to build cheaper, how to build better, how to build faster, how to fill the units faster, how to be a real real estate developer, how to be a real estate professional. And now I get to experience all these real estate professional tax laws that are lights out. So if you make all this money in your business, but you don't really manage your business anymore, it's kind of self-operating, and you start doing real estate more than 40 or more than, I don't even know the two laws, but it's I think more than, you got to be doing it most of the time of your working hours. And then you also have to, I don't even know the rules, so I'm not going to say them on here, but you can just Google what is the thing of a real estate professional. And if you become this, you can start wiping out the depreciation on your real estate assets, start wiping out your income, your active income. So you can depreciate a building you buy for $1 million, apply $200,000-$300,000 of that depreciating, a paper loss. You can apply it to your active income. So if you make $250,000 in your business of active income that you typically pay tax on, and you buy a $1 million apartment building and you put $250,000 down, you can use all that cash and actually wipe out the taxes you would owe on your business. So you start paying little to zero tax, and then you start really compounding money. Maybe you don't have a business. Maybe it's W-2. You're going to have to get out of the W-2, or maybe you're a high income earner. I always like to explain this. Maybe you're a doctor, a lawyer, tech startup, fintech, whatever you do. Maybe your spouse is a stay-at-home. Maybe your job is so busy that your wife is stay-at-home. And guess what? She's really curious about real estate. You're really curious. Well, all of a sudden, she starts attending coaching programs, mentorship, starts buying real estate, starts understanding real estate and spending most of their time. Well, guess what? If you're married filing jointly and she's a real estate professional, guess what? Because you guys are now married filing jointly, you are in the real estate professional, and you can depreciate, all the W-2, or depreciate the asset and wipe out your W-2 income taxes that you would pay significant. Obviously, most W-2 earners pay the most tax in this world and support it. So you would reduce all your tax liability, depending upon how much real estate you buy. Again, I'm not a CPA, but Google what a real estate professional, if that sounds interesting to you and you're sick of paying taxes. This is a very good, this is probably like one of the smartest things that I've ever heard on a W-2 earner, like a doctor who earns a lot of W-2 income. And then this is a way that they can pay little to zero tax. So a really good way if they're curious about real estate. So let's move on. Let's talk about the end phase, like the end of the decade where you're buying one real estate deal a year or whatever you're doing. Maybe you bought 10 a year. You know, now you're a commercial real estate, you're a residential real estate. You understand fix and flips. You understand every model by this point. You've done the residential fix and flips, the BRRRRs, anything short-term rentals, you know, kind of residential. And then you've also probably thought about commercial. What happens if I go bigger, like 30 plus units or 100 plus units? What happens if I buy a commercial retail center? What happens if I do industrial? What happens if I do like storage or start building something because I had cash now? You know, you just start understanding real estate. You're going to have a commercial real estate like degree, right? Like you're going to know everything there is about real estate. You've literally learned how to build a 7-figure, like that's a 7-figure high side hustle. This could take 20 minutes a day, by the way. Like in years 1 through like 3, like you might be spending a half hour a day. If you just spend a half hour a day, I guarantee you get a deal done. Even if you have zero cash, you do your little Dave Ramsey, you get the finances correct, and then you start taking down deals, even if you don't have a lot of cash. A lot of people don't. And start coming up with creative finance, which again, I'll talk about in that course next week. On Tuesday, we'll have a lot of that going. So this is it's a 10-year path basically to buying rentals, but which should lead you to believe that the path is not like you're going to get rid of your job tomorrow. I think what I want to say is that you want to maximize your W-2 income, maybe begin your side hustle. Maybe it's in content, maybe it's in buying a business, maybe however you want to do to increase your income. I'll let you come up with the ideas, but the easiest is just at the job that you're at. And this will build you a 10-year path to buying one rental every year. And you have 10 rentals, you're 30 now, maybe you're 35, maybe you're 40, and you're at 50, life is going to be completely different. At 40, life's going to be completely different. At 60, you'll be like, wow, that is something I would never regret, is taking down 10 real estate deals in 10 years. Like, completely changes the way you do life. Maybe you'll have those houses paid off by then. The amount of cash flow could be 10, 20, 30 grand a month, more than your 401k would ever pay you. And this is all done with 20 or 30 minutes on the side of every day. Like, do not overthink this. You're trying to replace your time, right? Like, time is the most precious asset. You want to, instead of trading all your time for money, like at a job till you're 60, 65 years old, because that sounds terrible, go and try to figure out, like, how do I buy one asset and just let it compound? Like, don't try to suck all the cash out of it, just let it go. Like, own it. Hopefully it cash flows $50 a month, but I know $50 a month is not going to change many people's lives. Don't even think about it like that. And if you're going to try and take down commercial real estate, there's a lot of creative finance. You can go a little bigger. You can take down 1 8-plex every year. I know you can. So guys, if you like what I'm saying in this, again, I'll be doing a webinar on Tuesday. We're going to be talking a lot about all this, buying back your time. How do we get assets to compound? So in a decade, our lives will be completely different, because I promise you, I'm in years 5 through 7 through this. Towards the tail end of that, I've learned everything about real estate. I've raised money. I've done almost any kind of deal. I've done creative finance. I've done straight deals, just putting money down on deals. This is possible for you. This is possible for anyone. And if you want to fast track it, make sure you're there next Tuesday. Appreciate you guys. See you.